All right, what's up, everyone? It's Eric with Option Edge. We're looking at CCIV as requested by one of you guys in the comments of our last video. And what else do I have to say? Well, we've seen over the last couple of days, we've seen some good buying, and this is one of the reasons I was just reading this article here why Churchill CCIV is up today, and basically they announced that the CCIV, Churchill Capital, and Lucid will be doing their merger, I think, on, let's see where it says. I think it was July 23rd. Okay, here we go. To finance all this growth, earlier this year, Lucid inked a deal to go public via a merger with Churchill Capital. In February, when the deal was announced, the two companies had said they had hoped to close the deal by the end of the second quarter. But Lucid and Churchill on Friday announced they anticipate closing the deal on July 23rd, following a July 22nd shareholder vote. So since they announced this, we've seen some increased buying. But still, I'm going to do what I did before, use the anchored VWAPs, anchor it to the high here. Then I also like to anchor it to the low. And you see, so basically when we anchor it to the high, it's basically saying that this is the average price paid for it. And when you see that the price is below the average price paid for it, that means that these people are losing money. So you got to think about, I'm going to delete that one. You got to think about market psychology. If you've been underwater, you've been losing since February, and now it's 5-6 months later. Are you going to keep holding it? Maybe. If you have diamond hands, maybe. But otherwise, I'm going to bet on human psychology that most people, once they get back to break even, they're going to sell. And that's most likely what happened here. You can see as soon as it hit, selling pressure. But this was, as time goes on, these VWAPs start to get less and less significant. And it's been some time. I'm going to go ahead and let's delete this. So that's at 27.5, 27. And hold on, let me do this. All right, let's anchor. Here's a sort of a local low. You can see this has formed a nice base of support here. So let's keep anchoring them. Where's another anchor this low here? Again, another base of support. So the trend is in the short term definitely up. So how can you play this? I talked about this before, and this is just educational info only. You can wait. So I still think that this is going to serve as resistance here, and we're going to see some selling when we hit it, and then maybe we'll get some, once it sells, we'll get some action down around here, and maybe around the 24 mark would be a good time to buy, or if you want, do a covered call. I bought 100 shares and have been selling premium, been selling calls, weekly calls against that. And so I'm hoping that as long as we don't fall below this 22 level, I'm going to keep selling premium until we break out above here. And then I'm going to close my position for a gain. You could sell a covered call. You could sell a put. You could sell a put spread. And actually, best place to sell a put would have been right at the 17.5 mark here. This is just a fixed price. It's another volume metric. It sort of shows the average price paid from, I anchored it from here to here, and it shows you that a lot of volume came in right here. That's what I think. And if we do break out above this, sorry, that's my dog. If we do break out above this, I'm not sure what the price target would be, but I think she'll have some legs. So another play you could do is once we break out and close above this line, maybe buying call debit spread calls, or what you could do is wait for the breakout to happen, wait for it to come back and retest support, and that would be a good place to buy some put spreads or calls, or sell put spreads or puts. That's it for CCIV. Hope you guys have a good week. Peace.